Now, in my last update, I talked about these two trend lines, with the log scaling and the linear scaling in the daily time frame. We broke the one with the log scaling, but we closed right back up just underneath it, just underneath the trend line in the weekly time frame. We had a breach, and this rebound back up has given us a bottoming tail in the weekly time frame. I talked about it with this chart right here. Here's the trend line with our log scaling from the 2023 low connected to our January low. We've slightly breached it, and we're just slightly under that 20-week moving average, getting a possible bullish hammer. Okay? Think about these trend lines. The log scaling trend line's been broken. We hit the linear trend line, and again, both of these are back from the 2023 low. Here's our linear trend line going back to the 2023 low, and you connect the low here from the summer of 2024, August low there, and then again, we've now reached that level. Doing so, we've filled the gap, the CPI gap from the previous month, and we hit the 78.6 Fibonacci of the previous advance. Let me show you. And we're also forming a bull flag. The gap fill and the 78.6 Fibonacci retracement. Now, with the S&P bouncing off that linear trend line, we've hit our, this is a 60-minute chart, we've hit our 78.6 Fibonacci. The low right here was right just barely underneath the log scaling trend line from 2023. We broke that level, and we hit the trend line from the 2023 low with the linear scaling, and we bounced off of it, hitting the gap fill, the CPI gap fill at 58.43 right here. And I talked about the 78.6 Fibonacci being at that same area, 58.53, and we hit those levels, and we, I believe, bottomed out. I think we're going to put in a higher low above the January low myself. Now we have this really nice looking channel. And again, I talked about these two levels. I talked about the 61.8 Fibonacci near the trend line last week, and I talked about it's near that rising trend line. Our log scaling, and I told you if we broke that level, we have the 78.6 Fibonacci down here near our CPI gap fill from January, and that's where we hit. So I think that, again, with sentiment at 60% of bears, 60.6, very bearish, the percent of bulls, 19.4%, we're at levels where you see bottoms. Herd is very, very bearish here. Sentiment is very, very negative. We are at levels of extreme fear. We never did reach the greed or extreme greed area with rally off of the January 13th low. We never exceeded neutral. So again, we're likely still going to go make new highs and reach the greed or extreme greed levels. But right now we're at extreme fear, likely witnessing a bottom. For a higher low above the January low, you tend to get these extreme readings marking bottoms with either extremes like we had over here in the summer of 2024, the August bottom, or you get the divergences like we had at the January bottom, where you get a low and then you get another low and the indicator diverges with the S&P 500. And right now we're at extremes again. We're probably going to see a higher low set up for subwave 2 of minor wave 5 on the S&P 500. So again, we don't have to set up a brand new whole divergence, but we have reached an extreme that very well could mark a low on the S&P 500 above the January low as we've come back to extremes yet again. We did break above the 50 area here. So again, it's likely that the top that we witnessed, called that peak on February 19th, I told you we were going to get a pullback because of negative divergences, and it led to the failed breakout. It's likely that was not the top. That's also given us the push down to the 78.6 Fibonacci. It's also given us a perfected 9 count signal. Some of these 9 and 13 counts have marked turning points. Here you had a double sequence count reversal signal. Here you had a 9-9 reversal signal. You had a 9 count here, went a little bit higher, and then you pulled back. Here you had the 13. This is the 4-hour time frame, the S&P 500. If I just zoom out and go further back on into the July peak here, and some are still off to a rebound, it's called some interesting turns. Just bring this up close so you can see it. We had the 9 count complete right here when we first tested our trend line, our rising trend line with our log scaling, and we tried to rebound, okay, and it failed. And on Thursday, we ended up breaking that trend line and going back to the linear trend line and coming back here to fill the gap, the CPI gap there on Friday. Thursday, we sold off, and Friday, we went down even lower to fill the gap, and then we rebounded by the end of Friday's session. We talked about that possibility. Here you got an evening star reversal, sorry, a morning star reversal. You've got the wide range bar down, you've got the doji, and then you've got the reversal bar up. That is a reversal candle pattern. It has to be confirmed to get a follow through, but you got a 9 count right there. Okay, but the low of the count was the 7 bar, which was right here. Once we pushed and closed below that level, and you don't even have to close, you could just get an intraday push below it. Once we pushed below that level and came down to the 78.6 Fibonacci and filled the gap, it perfected that 9 count. So even though the 8 or 9 bar wasn't the low of the count, so you didn't get these 9 bars showing up, it is perfected now that we've now dropped below it. The signal has now completed. The 9 bar has to be the low of the count, and if it isn't, once you drop below it, it will be a perfected signal, which is what we have right now at key support, the trend line with our linear scaling and breaching the trend line with our log scaling, but then rising back up to it with this bar for a bottoming tail there in the weekly time frame. And then you have the bouncing off of the gap fill from our CPI gap and our 78.6 Fibonacci. I think you've got a bottom here. I think you have a bull flag. I think you're going to end up forming an inverse head and shoulders possibly. I've talked about on the intraday charts, and again, I think you've got this 5-leg push lower, and then I think you've got possibly a left shoulder, a head formation. We go up a little higher, break the declining trend line of the bull flag, and then come back down, maybe get your right shoulder, or even a slanted neckline where it's something like that, and then we come back and do something like that where it's kind of a slanted neckline. Could be either way, but regardless, no guarantee you have this pattern play out if we just start, blasting off higher here, on a rocket ship move here. But if we consolidate sideways, this is likely going to be the case. So again, just watching that. But our bottom that we had with the filling of the CPI gap, the 78.6 Fibonacci of the previous advance, you have that perfected 9 count in the 4-hour time frame, and possibly this inverse head and shoulders with these bullish divergences that I've talked about on the 60-minute chart and the 30-minute chart, 15-minute chart. It's all over the place. So just food for thought. Now, if the trend lines do not hold that I showed you earlier, the log scaling, the linear scaling, the log, but on the weekly chart, we went back up to it and we got a bottoming tail. If they do not hold, we take out the January low, it's going to invalidate my count. If that happens, I have an alternative count. This is what I believe is going on. Again, we finished minor wave 4 here. We have our first wave, first subwave of minor wave 5 and the ABC for 2. I think you're going to get 3, 4, and 5 up to the levels I've talked about. If that does not happen, if we invalidate my count, and we end up losing this trend line in the weekly time frame, again, having dropped below it, gotten a bottom tail, we lose it, we close below it, we take out the January low. If we do that, then wave 4 never finished here, it's going to finish lower. If we get a solid break below the linear trend line, push back down off of the trend line with the log scaling that we did break but then closed right at the weekly time frame, we take out the January low, you get your 200 period, and then you possibly have an ABC move here. I think this count is less likely. Last week, I talked about 4 possibilities. 2 of those counts are invalidated. So it comes down to this one or this one, which I think is more likely. So again, I think the January low is going to hold. So just so you know, and again, if we break that level and we take out the 200 period moving average in the daily time frame, we take out the January low, taking out that January low, and we start moving back down towards the 50 period moving, or towards the 200 period moving average in the daily time frame, you're going to start triggering signals, sell signals in the weekly time frame. We don't have that right now. We're slightly taking out the 20-week right here, but the RSI is not below 50. The RSI has been above 50 ever since the 2023 low. And we triggered a 2050 buy signal there. We got back above the 20-week moving average after the sell-off there, and we got back above the 50 level, and we've been there ever since. Now we're forming multiple point negative divergences, so we're eventually going to get a reversal, but so far the divergences that we've seen have just given us the pullbacks towards the 20-period moving average. Here we slightly breached it, but then got back above it. The RSI never confirmed by dropping below 50, and again, we're still on the bullish signal. Has now been canceled out here at the 2023 trend line, where that signal originally started from, the bullish 2050 bull signal. You're above the 20-week, you're above the 50 on the RSI. It's called a 2050 bullish signal. That's what I call it. RSI is holding above the 50 level, and you're above the 20-week moving average. You could do this with the 50 period moving average as well, and you could do it in the daily or the weekly time frame. But here we're still on this bullish signal, a 2050 bullish signal, and we're testing our 20-week moving average. Now, if we lose the 20 here, and again, we're just slightly below it, but if we lose it, stay below it, we start seeing the RSI below that, you're going to get a bigger sell-off. But right now, in the positive region on the RSI. If we've topped and we're going to get a reversal, I'm going to know it, because my signals are in the weekly time frame are going to start turning bearish. And I talked about my last update. The S&P trend would begin to turn bearish and then remain that way. Here, again, the trend here is still bullish. We've had this sell-off on the S&P. Trend here, we're still in positive territory. The bullish trend from the 2023 low, the bullish trend from the 2023 low is still intact here in the weekly time frame. The trend is still bullish. You can see that here. You can see we're still in positive territory right here. So again, I think you probably have a bottom with the bottoming tail in all likelihood. Don't think this is done yet. Now, if we start seeing the January low taken out, a lot of weekly signals might start turning bearish. We might see that RSI drop into the negative region. We'll be watching to see. RSI has been above 50 throughout this bullish trend. We've seen the trend bullish here just after the 2023 low. So again, I think that we're at a make it or break it moment right now, where I think we're going to get another higher low. And look at the cloud right here. The cloud is still bullish. Trend here with the blue line, still bullish. So I think that you're getting a bottoming. Now you got a red candle showing bearish momentum, but it hasn't flipped the trend yet. That's the point I'm trying to make. So a lot further, you're going to start seeing begin to turn bearish weekly time frame. Both the S&P and Bitcoin are forming inverse head and shoulder patterns. You can watch my latest Bitcoin video at the end of this one. Exact same thing as the S&P 500. Very, very similar. So far, we're not seeing weekly signals turn back to bearish. Trending signals are still hanging in there, and momentum is still positive in the weekly time frame on the S&P 500. Get a bigger sell-off, that could change, but we haven't seen that yet. So I think you've got a good shot at a bottoming tail in the weekly time frame. We've come right to my rainbow cloud right here, and again, we're finding support there. The balance of power for the S&P 500 is still in the positive region. We're going to get a reversal. If the market is topped, we're going to see the weekly signals begin to change and then remain bearish. I think it's more likely that we're going to bottom. And again, the signals in the weekly time frame are still bullish for the S&P 500. The sell-off over the last 2 weeks, when I call that peak, when I call that top on February 19th, a week and a half ago, and we had the sell-off. I warned you the sell-off was going to happen. It hasn't flipped the weekly signal. So I think it's a pullback. I think we're going to resume the advance. But again, the signals here have been bullish since the August low. I think we're consolidating since November, and I think we're going to get a final push higher, as I've been talking about, to the upper channel line. I think Bitcoin's going to do the exact same thing. And again, they're moving, and the S&P and Bitcoin are moving in lockstep together. NASDAQ 100 getting a bottoming tail. We're at a make it or break it moment in the weekly time frame. Signals are still bullish right here. Got red bars reflecting bearish momentum. But again, we're right here. We're going to start going negative and getting a reversal, or we're going to try to bottom. Again, 2022, the trend has been consistently in positive territory. On Friday, we got new estimate from the Atlanta Fed that GDP is possibly going to come in negative in the first quarter for 2025. Here's the formula, the calculation for GDP, which is showing the weakness. Let me show you the Atlanta Fed. Now here it is. Here is the estimate. It is at negative 1.5%. We're in negative territory here. So again, now this is going to change. There's going to be revisions going into March. It may not end up a negative number, but I've been warning you, eventually start seeing the weakness with the GDP. We're going to start seeing the weakness begin to show up with negative negative numbers with the jobs report. We're going to begin to see the job losses happen. I've been warning you, is now happening. We're told this can't possibly happen, but yet it is. Now again, I'm predicting that we were going to see this happen with the GDP first or second quarter here in 2025. Even if it goes back to positive again, manages to squeak out again. Again, the GDP is still declining. It's still weakening. So keep that in mind. But again, they continue to tell us and have been saying, oh no, nothing to see here. We're not going to have a recession. That we're seeing all the warning signs. People just ignore them. I told you in the media, if you dare to think a recession is going to happen, well, you're just not sophisticated. We don't have recessions anymore. I mean, they say the same thing every single time. The Fed does. It's absolutely incredible. I've been predicting that these things were going to happen. We're now seeing evidence that they are. Now, last week, this estimate was at 2.3%. 4 weeks ago, it was at 3.9%. And now it's at 1.5%, negative 1.5%. Again, there'll be changes. It might even go back to positive here. The point I continue to try to make is eventually you're going to see the weakening of the GDP. Even if we don't get a negative number, again, you didn't have a negative number before the 2007 recession began. It happened right after, shortly after the recession began. So again, like I keep saying, the loss of jobs and the GDP and so forth, see all of this it's either right before the recession happens or right as the recession happens. But we're already getting the warning signals. Recession is about to start. We had a positive number a week ago, 2.3. 4 weeks ago, we had a very strong number of 3.9. And now you've got this. So what's causing the GDP estimate to collapse for quarter one of 2025? Well, first of all, we have the personal consumption expenditures, the PCE, which accounts for nearly 70% of GDP. The growth fell from 2.3 to 1.3 right there. So that's causing that number to decline. This reflects weaker than expected consumer spending in January. And this decline with growth falling from 2.3 to 1.3, it shaved off about 1% of the GDP estimate. So that's where we're getting it. But the biggest driver of the collapse in the GDP number is net exports. And this measures the difference between the exports and the imports. The GDPNow forecast is now estimating that net exports will crash from negative 0.41 to negative 3.70 percentage points, driven by a trade deficit spike. So this is where you're seeing the biggest driver of the collapse with the GDP number. It's a steep drop with a surge with imports. Now again, this is subject to change, but we're seeing the weakening of the GDP based on trade imbalances and softening demand. That's really what it's coming down to. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please take a moment to support the channel. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. You could take a moment to partner with me. I would really, really appreciate that. It would really be encouraging to hear from you. Thank you for your consideration for that. Got amazing signals on the NASDAQ, which is now diverging with the S&P 500, a possible another bottoming signal. The S&P has made a higher low. The NASDAQ made a lower low. They often diverge at turning points. Awesome oscillator and MACD still negative. We'll see if they turn back up. Stochastic trying to recycle back up as we fill our gap and test our 78.6 Fibonacci. Momentum is still bearish. It turned bearish right after. Again, I told you, warned you about the bearish divergences on the intraday charts, the 60-minute charts of the S&P and NASDAQ. Those divergences played out. We now have bullish divergences at these lows here, both NASDAQ and S&P, and they're diverging from one another. So I think you've got a really good shot of a bottom. I think Bitcoin is bottoming as well at the 200-period moving average. But in order to flip it around, you got to get the blue bars again. You got to flip the momentum. You got to get back above the 50. You got to get back above the 10 and 20 period right now and see a shift back in momentum. Momentum is still bearish, so we'll be watching to see if we can recover. S&P daily here. Momentum bearish for the S&P 500. We'll see if the signals can flip. The signals look identical to the S&P, but we've moved to a new low, so we are now diverging with the S&P 500. We'll see if that can mark a reversal. And you have a possible sloppy bullish piercing pattern, and we got a really nice looking one on the NVIDIA chart just under the 200-period moving average. And if NVIDIA can rally, that can help the NASDAQ. We'll be watching NVIDIA as well. Momentum bearish, remains bearish. We'll start doing damage in the weekly time frame. If we recover, that would be a very positive sign. And I believe that we have bottomed on Friday. See if that plays out and turns out to be correct. I think there's a good shot that we bottomed. Keep talking to you about different recession warning signs and recession indicators. Going to have a recession. We continue to see the Fed in denial, which is blue. Here I have the consumer price index, the CPI. The CPI, we've seen it turn back up. Remember, recently we got it. It was supposed to come in earlier this month, or earlier in February there, supposed to come in. On the cool side, it came in on the hot side, and we're seeing the CPI turn up. This is the inflation with the consumer price index, and there are different indexes. We also have down here continued claims. The shaded areas are recessions. And right before, now back in 2007, I continue to point this out, the Fed was so worried about inflation back in 2007 and 8, early 2008 there, but then they ended up having to cave and start slashing rates, doing an emergency cut in January of 2008. But yet inflation soared. You could see this right here. Inflation was rising just before the recession hit, and it was higher than it is right now just before the recession hit. And yet the Fed still in January, right when that recession began in January or December of 2007, in January, the following month, they began to slash rates, and yet inflation continued to rise. But here, pattern, and again, continuing claims. These are the people that continue to receive benefits, and again, it turns back up. Again, like the unemployment rate talked about, which is already predicting we're going to have a recession. We're going to get that jobs data next week. It's already predicting we're going to have a recession. And again, with all the government, the shrinking of the government, the buyout, layoffs, firings, again, we're seeing a downsize of the government. Eventually, that data is going to show up in the jobs report. It's coming. I don't know if it'll show up in this one, but it very well could show up in the next couple of months here. We'll be watching this next jobs report very, very closely. This is rising, okay? Do you see this? Do you see this? And now we're seeing the inflation tick back up. And this is what you have right before the recession. We begin to see the inflation begin to rise, and that's why the Fed is so worried about the inflation. Back then and back over here in 2001, they were all worried about inflation, okay, which is higher back then than it is right now in 2001 and 2007, before those recessions. The Fed all worried about inflation when they should be worried about the recession. They always make the same monetary policy mistake. Same thing over here. Look back in the 90s. Again, inflation rose right before the recession. It was rising, and then it kind of jumped around a little bit, and then it rose as we went into the recession, rose as we went into the recession, and then yet the Fed still did the jumbo cuts in 2007. And that's what people, I was mocked saying we're going to move into recession and we're going to get jumbo cuts out of the Fed because, oh no, inflation's turning back up. Yeah, well, if you can clearly see here, inflation had turned back up just before the recession, just before the recession. Just before the recession. And here the self-imposed shutdown of the economy. Again, even we had inflation turn back up. Continued claims rising. Continued claims rising into the recession. Continued claims rising into the recession. Continued claims rising into the recession. Rising continued claims. You have rising inflation simultaneously. With the CPI, you get a recession signal. Powell out there at the December Fed meeting telling us, oh, it's clear we've avoided a recession. They're always blindsided by it. He's concerned about inflation right now. The tariffs and because this is going to overheat the economy and create all this inflation. The tariffs don't cause inflation. Their policies cause inflation. They never want to look at themselves in the mirror and various things that they can do can increase the money supply. That's what causes inflation. So just another warning sign that recession is right around the corner. NASDAQ was down 3.38% this week, but we're hitting the trend line here with our log scaling. We're hitting it and trying to bounce off of it. Yeah, we have these divergences. I've been talking about them, but here on the RSI, we're right at the 50 level. Can we recover? This is where we covered over here at these two lows right here. This is where we recovered right here. Can we recover? And we're just under our 20-week moving average, hitting this trend line in the with our log scaling. We'll see if we try to bounce off of this trend line. But we broke this accelerated trend line with our linear scaling. We still have this trend line, this longer-term trend line still intact right here from the low here, here, and over here. Never did reach that upper boundary here with our linear scaling, the upper channel line from here and here. Still may attempt to do it if we attempt a recovery, but we lost 3.38% for the week for the NASDAQ. And again, coming back down and slightly taking out the January 13th low, but not closing below it, which is interesting, and then attempting to rebound. The S&P in the monthly time frame got a candle of indecision in the form of a doji or spinning top looking kind of a candlestick, and again in this sideways trading range ever since November. So we have November, December, January, and February now just kind of in this trading range. Do we bump up higher or do we start reversing? Again, I believe that we've bottomed. I believe we're going higher, but again, just showing you what's going on in these weekly and monthly time frames. So here we've got this candle of indecision. The candlesticks on NASDAQ are troubling. Now the NASDAQ monthly chart is troubling. Again, we had the topping tail in December. It did not get confirmed in January. It did slightly, I guess you could say it did. It didn't get a decisive push below that level. This was 20,913, and the close here was just at 20,884, so just a few points below that level. I don't know if I'm convinced of that, but again, we'll see what happens. Again, we are seeing selling into the rallies on the NASDAQ, and that's clear. So again, we'll be watching what happens. We get a candle of indecision. This is a spinning top candlestick, so it's a candlestick of indecision. It could be a continuation or a reversal bar. Again, my guess is S&P and NASDAQ are forming a short-term bottom. NASDAQ, it still may diverge with the S&P. It just goes sideways for a long time. But I think S&P is going to go make new highs. NASDAQ may make new highs and then diverge with S&P at higher levels. That may happen as well. But troubling candlesticks here in the monthly time frame on the NASDAQ as we close out the month of February, move on into March. NASDAQ was up 1 point, NASDAQ 100 up 1.62% there on Friday. Again, got below the January low, came back, filled the gap here at 20,789. And on the 19th, I told you that we were going to get a sell-off in the market. We had these failed breakouts. I talked about that right after we turned. Told you it wasn't very convincing here. We broke to a new high, but it never got confirmed. Got the follow-through. Failed breakout, and then we came and broke this trend line, and then we took out the cloud and we took out the 100 period, and we got that bigger sell-off on Thursday. Now we get this attempted rebound, so we'll be watching to see if does the MACD try to go positive, turning back up to attempt recovery on the NASDAQ. The stochastic turned back up there on Friday. I talked about how the stochastics do that, and again, the VIX did predict an up day for a bounce or bottom on Friday or Monday, and we got it on Friday. The same attempt of a rebound on NVIDIA on Friday was up 4%. Again, this is a bullish piercing pattern. NASDAQ has kind of a similar, kind of a sloppy version of that, but it is a bullish piercing pattern, the opposite of a dark cloud cover. This is a bullish reversal pattern. We're still below the 200 period. We're going to be watching to see if we get rejection at the 200 and hold below it, or if we attempt a recovery. Again, I told you we were going to get a pullback. This was part of the reason why, is because NVIDIA was hitting the trend line and filling that gap. And I told you we are likely going to get a pullback ahead of the NVIDIA earnings on the 19th with those negative divergences on the S&P and NASDAQ. That was correct. Now we'll see. Again, do we get a higher low above this low here, or do we, again, struggle to be able to get above that 200 period moving average? We'll be watching to see how this unfolds. Have either a falling channel or a possible bull flag if you could go up and break the downward trend. So we'll be watching that, but we're still under the 200 period, but you got a bullish reversal pattern on NVIDIA. Again, the NASDAQ has kind of a sloppy version of that pattern, bullish piercing pattern. Not quite a perfect pattern there, though, but we broke the trend line right here. We took out the 100. We took out the cloud. We filled the gap right here. Now below is that 200 period, and we have the gap fill at 20,227. And again, the trend line with the log scaling. We'll see if we bounce without filling that gap, or do we try to recover after hitting the 200 period. Again, I think you've got a good shot that the S&P 500 is bottoming out. We'll see if NASDAQ can do the same thing. The failed breakout and these bearish divergences that formed. And again, we'll see if the MACD can recycle back up like it did over here the last time. Here at the January low, which we slightly took out on the S&P, or slightly took out on NASDAQ. So they are diverging. S&P didn't, NASDAQ did. Again, divergence between the two. Could that give us a bottom? Very, very possibly. We could be bottoming. Again, NASDAQ and S&P are diverging. S&P made a higher low, NASDAQ made a lower low. So again, they often diverge at turning points. Is this one of those cases? We've got the bullish diversions here on the 60-minute chart for NASDAQ, bullish diversions on the RSI, bullish diversions now on the MACD down here. Did we just bottom on NASDAQ at the trend line with our log scaling, hitting that trend line and bouncing off of it? So we'll be watching. Again, we've had this sell-off that's formed this downward channel, very similar to what Bitcoin did. We've come right up. We've stalled at this trend line right here. Are we going to break out? Are we going to get an inverse head and shoulders pattern? Maybe. You could set that up if you get a big rally back up into here and you start forming an inverse head and shoulders pattern. Could see that and then get a throwback and then go on our way. We could see something like that happen. Do we rally up higher and then sell off with the tariffs kicking in there on Tuesday, but then it happens and then we go parabolic. We start going parabolic, and we'll be watching if we can now take out this high or not. But again, we've had a big sell-off since the last week and a half when I talked about that divergence. I predicted we were going to get sell-offs before it happened on S&P and NASDAQ. It did. But now we have the bullish diversions. Again, these divergences have been just knowing the turns on the NASDAQ, on the S&P 500. I've talked about these divergences at great length of detail, and it's been pretty remarkable. So again, we've taken out the January low, but we're getting a divergence with the S&P, and now we have bullish divergences here on our 60-minute chart again. So I expect we're going to rebound, see if NASDAQ can recover.